Well, good morning or good afternoon, whatever the case may be for you folks today. I want to welcome everyone to today's webinar, Making Sense of the ACA Reporting Process. This is a special webinar hosted by Dexter and Cheney and presented by our technology partner, Nelco Solutions. I'm Andy Holtman with Dexter and Cheney, and in just a few moments, I'm going to turn things over to Jason Jennison with Nelco Solutions. But as folks are still kind of trickling in this morning, I just want to take a few seconds to go over a few housekeeping tips for anybody that might be new to the GoToMeeting or GoToWebinar interface. This is your first time. You might notice the navigation bar on the right-hand side of your screen there. This is how you interact with us today during the webinar. And on top of that bar, you should see an orange arrow. You can expand or hide that navigation bar to your liking. But you also notice a number of different options we have there where you can adjust the settings or interact with us and more. Another thing you might notice is that you are muted today. We have a good number of people on the webinar, into the hundreds or so today. So we just want to make sure that everyone can hear the presentation. There's no background chatter or noise or anything of that nature. However, like I mentioned before, that navigation bar, you can still use that in the question box there to interact with us today, or you can raise your hand. You can ask a question, make a comment at any point during the webinar. Speaking of questions, if you do have a comment or question during the presentation, just type it in there and we'll do our very best to try and answer it. If we can't get to it during the webinar, we'll certainly try and get to it at the end of the webinar. But keep in mind there are quite a few people on this webinar today, so if we do not get a chance to get to your question, we'll do our very best to try and follow up in the next few days after the webinar is complete. We are also recording this webinar today for folks who would like the recording. You can certainly just let us know and we'll make sure we get that to you. Also, we'll have hopefully the slides from today to share with you folks as well. Now, most of you today, since this is a webinar that is geared toward Dexter and Cheney's clients, most of you should be Spectrum clients and know about Dexter and Cheney. But just in case, if you don't know, we are a construction software company. We specialize in business management and operations solutions. And our Spectrum construction software is a full suite accounting, business management, project management, service management, and equipment management solution. And our latest version, version 14, is fully browser-based, and you can access our software wherever you have an internet connection. And most of you, I'm sure, know that already. But something you might not know is that Dexter and Cheney, we partner with a number of different industry associations, organizations, and technology companies in partnerships like with Nelco here to bring a host of educational resources to the industry, including webinars, white papers, videos, blogs, podcasts, and a whole lot more. You can find these by visiting our website at www.dextercheney.com. And just a quick word about our partnership with Nelco before I turn things over to Jason. Yeah, we here at Dexter and Cheney partnered with Nelco a little bit more than a year ago now. But Nelco's been around since 1952, and they've been a trusted source for business form solutions and services. And with our partnership, Nelco is really helping our clients streamline their year-end processes and facilitating the electronic filing of W-2s and other forms. And Spectrum users can easily utilize Nelco's services, including having access to hundreds of templated W-2 and other wage reporting forms, including ACA. Now, over the years of working in year-end forms, Nelco's become a bit of an expert in these year-end processes and how to simplify them. Now, with that, I'm going to go ahead and turn things over to Nelco's Jason Jennison. He's their partner relationship manager, and he's going to walk us through some of the intricacies of the Affordable Care Act and how it affects your year-end filing this year, and what you can do to possibly better prepare. And then Jason may take a little bit of time and also show you how some of the services from Nelco can really help you streamline your year-end processes as well. So Jason, with that out of the way, sir, let me go ahead and turn things over to you.
Thank you very much, Andy. Appreciate you going through that. Thanks, everybody, for joining us today. As Andy mentioned, I am Jason from Nelco. Quick introduction. You guys may or may not know who Nelco is. Here at Nelco, we consider ourselves to be specialized in year-end reporting and wage and income reporting specifically. And so what does that mean? Well, you guys probably think about your year-end reporting for 1 or 2 months out of the year, and it's probably something you dread. That's been our experience. At Nelco, we think about year-end reporting year-round. So we're going to finish up reporting this year, and then we are going to get right into thinking about next year and trying to figure out how we can make our services easier, simpler, and help you guys complete your filings in a more efficient manner. And so we're always thinking about year-end reporting. It obviously gets a little bit busy for us right about now, through the end of January or a little bit later even. But we love it, and we prep all year for these next couple of months. So that's a little bit about Nelco. We're also going to be going through the 1095-C, the form and the codes today, some changes for the 2016, filing your 1095-Cs through Nelco, and then we'll do some Q&A as we have time for. We do have a lot of data to cover, and I do want to kind of preface this by saying this is not going to be an exhaustive webinar on 1095 reporting. There is just simply too much information. We'll be here for the next 3 weeks if we are going to go through everything that was offered in ACA reporting. So today specifically I want to focus on the 1095-C, talk about some of the changes to that form. A couple things I won't be talking about is an ALE, figuring out whether you are an ALE or not, that 50 employee threshold. We can spend a lot of time going through how to determine that. I'm going to set that aside. This is year 2. I'm guessing most of you have not or already know whether or not you're ALEs. If not, we can talk about it. If you guys might have some questions, we can talk about that towards the end. But we're going to go ahead and assume that most of you have determined that you are ALEs, and that's why you're here. Well, let's just get started here. A little something to start with, a little Dilbert humor. You might need a checklist to keep track of all the requirements of the Affordable Care Act. The good news is that robots are unlikely to take your job because robots can't survive that level of boredom. We're going to try to make it a little bit more exciting than that, and we are going to hopefully help you understand some of the changes for this year after you're done. Before we get started, I want to kind of talk about the elephant in the room. The election last Tuesday is probably making some of you wonder what this means. President-elect Trump and the Republican Congress have talked several times at length about repealing the Affordable Care Act. And we don't know what the future is going to bring. Nobody really knows exactly how it's going to look a year from now. We are going to be monitoring it closely over the next year. That being said, for this year, nothing is changing. I mean, there are going to be changes, I should say, but that does not change anything for your reporting this year. I really want to emphasize that you are still required to report your ACA reporting this year. It's not been repealed yet. And so I would really encourage you guys to take the reporting for this year seriously. And next year is a new year, and we will have to take it as it comes there. So again, a lot of people were like, are we still going to do ACA? Is it going to be gone? Well, it's not going to be gone by January when you start reporting these forms. So it's something we're stuck with for, again, this year. So let's look at this fun 1095-C form. I've highlighted the changes for the 2016 1095-C over the 2015 version. And the highlighted changes are really, there is not a whole lot of changes beyond clarification. Obviously, the date has been updated up here. There's been a clarification that you do not need to attach this to your tax return. You want to keep it for your records. Line 15 label has been clarified. We'll talk about that in a minute. Line 16 label has been clarified. I want to emphasize that those lines have not actually changed the information. The IRS just clarified that information, so that way you have a better idea about what you're supposed to be putting in those lines. Obviously, there was some confusion last year that they're looking to clarify. We obviously applaud the IRS for that. Down here in Part 3, you see there's another other TIN added, another date of birth field added. And then this one is pretty key here, the individual enrolled in coverage. Big question last year. We'll talk about that in a minute, too, about Part 3. So let's just start with talking about the 1095-C. As you can see, it's divided into 3 parts, Part 1, 2, and 3. Part 1, this is the gimme. We'll start with the easy stuff, the employee name and then the employer information. All this stuff is things that you should have readily available in your system: the employee's name, SSN, your name and address, and EIN. The one thing that you probably will start wondering about is that SSN field and the corrections, the TIN validation errors that you received last year, and we're going to talk about that a little bit more towards the end too. So we will get to some of the changes in TIN validation errors. That was a pretty significant problem last year, and a lot of people had questions about. So the IRS is trying to do what they can to clarify that. So that's Part 1. Like I said, kind of a gimme, something that most of you guys have handle on. and not a whole lot of confusion there. Most of the questions come in this lousy part 2. And this is the codes, right? You guys, if you've seen this before, you know what this is. I've blown this up. As you can tell, there's the all 12 months field. There's also January through December fields. I assume you know the months of the year. Don't need to show those, so I chose to blow up the labels on each of these fields a little bit more for you. But the fields do all the way go out January through December. You can use the all 12 months field if it applies to every single 12-month period. I will caution you right now that if you have a different change in line 14 and you have to populate all 12 months and you can't use the all 12 months box, you should not be using the all 12 months box in 15. Make sure that line 14 corresponds to line 15. So let's talk about line 14, because lines 14 and 16 require codes. Line 15 requires an actual dollar amount. Let's talk about the codes in line 14. I'm not going to go through each one of these one by one. I'll give you a couple quick highlights, and we've highlighted the changes in red here. So first off, you are talking about the qualifying offer. You're talking about what you offered your employees, not what they took, not the highest level that you offered them. If you offered them 3 or 4 different or 2 multiple different deductions from their paycheck, you want to try to simplify this and strip it out, and you really want to look at the offer of coverage to your employees. So basically, what did you offer them, not what they took. We'll talk about whether or not they took the coverage a little bit in line 16, but for lines 14 and 15, you really want to look at the offer of coverage. And so we'll just go through line 1A really quick, just so you guys get an idea about what we're talking about here. So the qualifying offer was MEC, which stands for Minimum Essential Coverage, providing MV, minimum value, we're abbreviating here, offered to full-time employees with employee required contribution equal to or less than 9.5% as adjusted. Last year it was 9.56%, slight adjustment there, of the mainland single federal poverty line, and at least minimum essential coverage offered to spouse and dependents. So basically what it's saying here is you offered coverage, minimum essential coverage with minimum value, offered all your full-time employees, or this particular full-time employee, I'm sorry, and their contribution was equal to or less than 9.5% of the poverty line. You can determine that. That's going to be a static number. They're kind of going back and forth about what that federal poverty line is right now. So I don't have that number at my fingertips. However, you can determine that. And then you also offered coverage to spouse and dependents. Now again, you are looking at the price when you are doing this of the offer to the employee only. You're not looking at the cost to the spouse and dependents. 1B, you offered coverage to employee only, employee and dependents, but not the spouse, on down the line. 1D, description changed a little bit. You should not be using 1D if the coverage for the spouse was offered conditionally. Instead, use code 1J. 1J, you come down here and see that that is a new code that has changed a little bit. We're going to talk about conditional coverages here in just a second. Same thing with 1E, little change. There's an offer of coverage for at least 1 month of the year to an individual who is not an employee. So 1G changed a little bit, and then they added that it was an individual who's not an employee for that month. 1I has been made not applicable anymore. Code 1J is minimum essential coverage, providing minimum value offered to employee, and again, that conditional offers for 1J and 1K. So those are the changes to line 14 codes. I think one of the key things to notice is unless you have conditional coverage, chances are these codes, and unless you change something significantly in your plan, chances are these codes should be similar to how they were last year for you. So part 2, let's look at line 15. Line 15 is the employee required contribution. And again, this is the least expensive employee-only plan on a monthly basis. How much do they have to deduct from their, not what the employee took, not the employee plus their family coverage, just the employee-only coverage. That's the amount you want to put in line 15. Again, don't think about what coverage they took. Don't look at the deduction from their paycheck on a biweekly basis. Look at the offer of what they would have taken out that month. And that's what you're going to put in line 15. Employee-only coverage. Can't emphasize that enough. You want to complete line 15 only if 1B, C, D, E, J, or K is entered on line 14. If you enter code 1A, they know that you're below the federal poverty line, so they don't really care how much it was. They just know it's below, so they're going to call that good. It's 1H is another code that says you didn't offer coverage, so obviously there wouldn't be anything in that line. So if you have code 1A or 1H or 1G or 1F, you do not need to complete line 15. And again, remember, this regards the offer of coverage, not the coverage chosen and the amount deducted. This will probably be the same for every one of your employees. Some of you may offer different deductions to different employees depending on their position. However, most people have the same coverage offered to all employees. And if they are full-time employees, and you offer the same thing to everybody, this number should be the same on every one of your 1095Cs. Doesn't matter what they took. Again, it was what they offered. If everybody's offered the same, it would be the same. That's line 15. Line 16 is the safe harbor codes or other relief. Enter the code if applicable. One quick note, if no code is applicable in line 16, you may leave it blank. Don't recommend leaving it blank. However, if nothing applies, leave it blank. So not a whole lot of codes here, but there is a hierarchy to these codes and the codes that you want to choose. The first is multi-employer and interim rural relief. If you have that situation where there is a union situation mostly, you would use code 2E. That is the first one you look at to see if it is applicable. If it is not applicable, look at code 2C, the employee enrolled in the health coverage that you offered, or one of the coverage that's offered. Again, any of the coverage that was offered, they took, you're good. Put 2C in. The other codes are, after that, find the best code. If the employee wasn't employed during that month, they're a new hire, or they terminated employment at some point during the year, code 2A on those months. If the employee was not a full-time employee, perhaps you had them on a part-time basis for part of the year and a full-time basis for the rest, you would put code 2B. The employee was in a limited non-assessment period. In that period, when you don't have to offer them insurance at the beginning of their employment, you want to use code 2D, code 2E we talked about, and then codes 2, F, G, and H are the safe harbors. The safe harbors are there, so that way you can ensure that the coverage that you offered your employees was affordable. The W-2 safe harbor, basically what you're saying is it's 9.5% or less of their W-2 wages. The federal poverty line safe harbor was what we talked about before with code 1A. Code 1A and 2G frequently go together. And then code 2H is the rate of pay safe harbor. That's where you would be calculating that based on the rate of pay. Again, we could spend all day walking through these safe harbors. However, I would recommend that you guys take a look at those in a little bit deeper detail at a later time, and we can go through them. Code 2I is no longer applicable, so it has been removed.
Hey, Jason, this is Andy real quick, just popping in because we do have a couple of through. One question, if you use code 2E in line 16 for union employees, what code should you be using in line 14?
That is a good question. Line 14. Your best bet is probably going to be code 1H. Again, use the correct code. But if you did not offer them coverage because they are under code 2E for a union, and so you did not offer them any coverage, I believe code 1H is the correct code to enter in that case.
Okay. And it's real quickly,
I will double check that though.
Yeah. And it's real quickly, another question was asked about Spectrum. Last year, Spectrum did not have a 12-month option to check, and we had to enter in all 12 months for employees. Will that be fixed for reporting this year? I'm currently looking into that, Crystal, and I'll try and get the answer to that as soon as I can. If we can't get to that by the end of this webinar, we'll follow up with folks on that one afterwards as well. All right. Thanks, Jason. That's all I have right now.
No problem. Thank you. I'm happy to answer those questions. So, one quick note on line 16 codes. A safe harbor code should not be entered in line 16 for any month that the employer did not offer minimum essential coverage to at least 95% of its full-time employees and their dependents. On your 1094C Part 3, Column A, You need to certify that you offered coverage of minimum essential coverage to 95% of your full-time employees and dependents by checking the yes box. If you check the no box for any one of those months inside of that period, you should not be using a safe harbor code in line 16. So just kind of a good general check. Don't put a safe harbor code, that's codes 2F, G, or H, if for any month that Form 1094C Part 3 Column A is selected no. All right, Part 3. Part 3 is a little bit simpler than Part 2 just because there is no codes to calculate or figure out. However, it still caused quite a bit of confusion this year. Part 3 is covered individuals. This box should only be checked if you provided self-insured coverage. The best way to determine whether or not you have self-insured or fully insured coverage is to contact your employer. However, just a really quick breakdown of the difference between the two. Self-insured coverage is where if I go to the doctor and I work for a self-insured employer and I run up a $100 bill, my employer pays $100. That's what self-insured is. They are basically the insurance company. In a fully insured situation, if I go to the doctor and I run up a $100 bill, the insurance company pays $100. My employer just pays their monthly premium. So again, that's kind of a very high level, maybe overly simplistic, but it gives you an idea of what it means to be self-insured. Like I said, for the best case, you would probably want to contact your insurance company to determine whether or not you are self-insured or fully insured. If the employer provided self-insured coverage, check the box and enter the information for each individual that was enrolled in coverage, including the employee. Those are two clarifications the IRS put out there because there was a lot of questions. Most notably is that if I'm a self-insured employer and I have employees who waived the coverage, should I still check the box? The answer was no, but the IRS did not have that very clear on the form last year. And so they've added that clarification. So only if the individual enrolled in coverage. If an employee waives coverage, there are no covered individuals to report, obviously, because it only happens for covered individuals. Even if the employer is providing self-insured coverage, but the employee waives coverage, the box should not be checked. One other question that was very common is that the IRS had a lot of questions regarding, do I put the employee inside the covered individuals? And the answer is yes. In fact, the employee should get that first slot on here, line 17. If there are other covered individuals, they should be listed. So in my case, Jason Jennison would be on line 17, my wife would be on line 18, and my two children would be on lines 19 and 20. So even though my name is back up in Part 1 that we talked about before, it should be duplicated down in Part 7 or Part 3, line 17, and then have the rest of my covered individuals and dependents listed there below. So let's talk about some things that have changed. Let's talk about those conditional coverages that we talked about in line 14. A conditional coverage is an offer of coverage that is subject to one or more reasonable objective conditions. So example, an offer of coverage to an employee's spouse only if the spouse is not eligible for coverage under Medicare or a group health plan sponsored by another employee. So example, if here at NELCO, I have insurance, and if we had conditional coverage, the only way my wife would be covered by my insurance or would be eligible to be covered by my insurance is if she did not have an offer of coverage from another employer or if she did not qualify for Medicare. A conditional offer, and it is okay by the IRS to offer this, basically says we're not going to cover somebody that could be covered by somebody else. That is a fair and legitimate qualifier. Using the new codes 1J and 1K, an employer may report a conditional offer to a spouse as an offer of coverage, regardless of whether the spouse meets the reasonable objective condition. So, for example, just because in the situation I noted before, my spouse, say she would not be covered by her employer or by Medicare, Just because she doesn't qualify for that reasonable objective condition, it doesn't mean that you would not want to put one of the codes on there. If you have an offer of coverage that is qualified, that is conditional, you really want to make sure that's reported as such, regardless of whether or not the employee fell into that conditional coverage or not. I think the clarification needed here and the emphasis needs to be that this is about the offer of coverage. It's not necessarily what was qualified for. Again, line 14, only looking at offers. TIN validation errors. We talked before, this was a significant source of frustration for a lot of people last year. One of the tips we said is, don't use their W-2 as a validation. And I'm going to get into why a little bit, and I hope this isn't getting too far down deep in the weeds. But here's the way to think about it. The IRS, the SSA, the IRS Fire site, the SSA site, and this new AIR site for 1095 reporting with the IRS, they're all looking at the same database. However, in that database, it says Joseph Smith, 1, 2, 3, 4, 5, 6, 7, 8, 9. It's the SSN. A W-2 comes in, and Joseph Smith might come in on that W-2 as Joe Smith, SSN 1, 2, 3, 4, 5, 6, 7, 8, 9. So the SSA system looks at the SSN 1, 2, 3, 4, 5, 6, 7, 8, 9, sees it says Joseph Smith in database, and sees that the W-2 has Joe Smith. And the SSA site, over years and years of accepting these things, has been made more intelligent to say, okay, Joe is Joseph, so we're not going to reject that. We're not going to force anything. We're just going to accept it and say that's an acceptable case. When the IRS built the AIR site, unfortunately, they did not build it quite as intelligently as Fire or the SSA site. So even though they're looking at the same database, Joe could have come in on W-2 and gone through just fine. If you put Joe on a 1095, it was going to error out because the database is saying Joseph. We don't know who Joe is. We only know a Joseph. So therefore, we're going to throw it out. We're hoping that the IRS system gets a little bit more intelligent as time goes on. That being said, it is important that things are correct. And we did have a lot of people last year saying, I've submitted this W-2 for this person for years and years and years, and never had a problem. Now I'm having a problem with this. The IRS system must be wrong. Well, our IRS system isn't wrong. Actually, you've been submitting that W-2 wrong for a long time. The IRS is just saying, or the SSA was just saying, okay, we'll accept it. We can match that. Good to go. So these are frequently called SSN match errors or TIN validation or TIN matching errors. And that's why, because they can't match the TIN to the name that you submitted. Couple quick things about this year. The IRS intends to pass back which name had the error. So for example, Joe's name's on there, and he also has his wife Mary and their son John and their daughter Jane. And for example, last year IRS would just come back and say, hey, this 1095 is wrong. And you didn't know if Joe was wrong, if Mary was wrong, if Jane was wrong, or John was wrong. The IRS doesn't tend to delineate and say which employee is incorrect or which covered individual, which SSN name combination is incorrect. Not just, hey, this form in general, so even if there's 10 people listed on here, you have no idea. That being said, a lot of people said, well, I don't know what's wrong with this. Well, the IRS doesn't know what's wrong with it either. I should say, if somebody went in there and manually looked at it, they would know. But if they were able to do that, they would make most of these matches. So it's still going to be frustrating. I don't want anybody to think for a second that there's going to be no frustration gone here. However, I would recommend you look at their SSA card and you contact the Social Security Administration, SSA, so that way you can get the best information. One other thing to think about is specifically when you're looking at the covered individuals, go back to part 3 here, you'll notice that the date of birth, if the Social Security number or other TIN is not available. This is not available for the employee in Section 1. For them, you do need to have the correct SSN. However, again, you should have Joe's correct SSN. He's your employee. If you don't have that, we have bigger problems than the 1095 error report. However, you might not have his wife Mary's SSN, or it might not be accurate. You might not have Jane and John Doe's Smith's SSN's correct. the IRS does say if that information is not available, you can substitute their date of birth. Highly recommend doing that just as a best practice to help alleviate some of those errors. Those are 10 validation errors. One thing we want to talk about too is filing deadlines. You guys probably know that there were some filing deadline changes for W-2s and 1099s. Talked about that earlier in the week at another webinar. I encourage you to go check out that video if you have any questions about it. However, the filing deadlines technically did not change for ACA. And you're going to say, well, it seems like they did. But let's just walk through them, because last year, the filing deadline for postmarked recipients, these are forms mailed out or handed out to your employees, was January 31st. Postmarked to the IRS was February 28th. Electronically filed to the IRS was March 31st. However, last year in December, the IRS decided to extend these deadlines. And they extended them out to end of March, end of May, end of June, respectively, to all these. This year, these are the dates. And this is the date that you're going to have to file them by. It should be a familiar date pattern because it's the same as W-2s and 1099s were before there was a deadline change this year. So these are the dates. I highly recommend that you guys meet these dates as best you can, because there is no sign of an extension at this time. It's just one of those things where last year the IRS heard from industry experts. There is a suspicion that the IRS was not ready to accept ACA filing on time last year, and so consequently there was an extension. However, this year is not looking like that's going to happen. Be ready to meet these deadlines. Filing accuracy, one more Dilbert slide. Today I will teach you how to fill out a 1095-C form for the Affordable Care Act. Just randomly check boxes and hope no one ever notices. I've been doing that for years, and it's a huge time saver. This slide, this cartoon was funny last year, and to a certain degree it was a little bit true. Not really, but the IRS did indicate that last year you wanted a good faith effort. Make the filing deadlines correct, do the filing for all the employees, but make a good faith effort. Basically they're saying don't go out of your mind trying to figure out everything that was wrong or everything that needs to be perfect. Make a good faith effort, get the filing in, get it in by the deadlines, the extended deadlines, and you'll be good to go. The IRS indicated that they're not going to crack down on penalties. This year, the good faith effort clause has basically been eliminated from the IRS lexicon. You need to make sure that your filing is accurate this year. A simple good faith effort is not going to be enough to get you through. This needs to be correct. Really encourage you, each one of you, to learn what needs to be on that form and make sure it's correct when you go through it. So I want to talk just for a second and walk through what it would be like to get these forms done through Dexter Cheney quickly and through the NELCO side. From Dexter Cheney, from the export screen, you have the option to export the NELCO CSV form, at which point you can do that out of your Spectrum software, save it on your desktop, and then you can come out to this site. And I'll have a link to this site here in just a second. From here, if you've never created an account before, go ahead and click Create Account. And you can just create a quick account with us. You can do this at any time. There is an email address, password, name, address, pretty basic stuff. I already have an account set up, so I am just going to go ahead and log in. And then you can come to the import page. And you can browse and import the file that you saved out to your Spectrum software. Make sure to choose the correct form type. In this case, we're going to be looking at Affordable Care Act reporting. And click Import. And you're going to come to this screen. This is called the Forms in Progress screen. In here, you have all the employees listed for the people that you submitted, and the companies. If you're filing for multiple entities, both companies will be listed here, whatever you imported from that file that you saved out of Spectrum. There's two services available. Federal e-filing. This is where we're going to submit it to the IRS on your behalf. Recipient mail and online retrieval. This is where we will go ahead and print and mail the forms directly to your employees on your behalf. We'll also be posting it to a website. Talk about that a little bit more in just a second. However, that is where we can take care of this. You do not have to print and mail anything, not to the IRS, not to your employees, no handing it out, no stuffing envelopes. We'll take care of everything. Once you're good there, go ahead and click Next. As you guys know, the 1094-C is the transmittal form. Every time you submit the 1095 form, you do need to complete a 1094-C alongside of it. And so we will go ahead and ask you for any information that might be missing from the 1094-C. Go ahead and click on the company that you want to complete the 1094-C for. Give me just 1 second while it brings it up. And here you go. Here's the information. Now, if you're in this field and you click Next, and there's still information that's needed, it will outline in red, saying this is a required field. In this case, they're going to ask if this is an authoritative transmittal for this ALE member. Every employer needs to have one authoritative ALE, one authoritative 1094-C, not more, not less. Every time you transmit, you need a 1094-C. However, one of them needs to be authoritative. For this case, we're just going to go ahead and say this is not the authoritative transmittal for this ALE member. We're going to do more later, and that one will be authoritative. Now, if we click on Complete Transmittal here in this screen, it'll bring up the other ALE that needs information. For this one, we're going to say this is the required transmittal. I'm sorry, the authoritative transmittal. And so this is going to cause other forms, other boxes to be filled out. Total number of forms 1095-C filed on or behalf of the ALE member. We're going to say there was 8. Is an ALE member of an aggregate ALE group? We're going to say no. Full-time employee count? We're going to say 8. Total employee count? We're going to say 8. We like 8, apparently. Go ahead and click Next, and you'll come to the screen called Submit Forms. If you want to preview the forms, see what the 1095-Cs are going to look like before we mail them, go ahead and click Preview Forms. You can print that out, review them for accuracy, and come back to it later if you'd like. Once you're all set, if you want to remove these people, you can. If you want to add edit emails, these are employee emails. And what we're going to be doing with these email addresses is each of your employees that have an email address will receive a link in an email that says you can go out here and download your 1095-C form electronically. Punch in the last 4 digits of your Social Security number, and you can pull up that form electronically in addition to receiving the mailed copy going to them. Once you're all set, go ahead and click Next. This is the payment screen. If you've never paid with us before, click Add a Card, and you can add in the card as you see necessary, or whichever card you'd like, and we will save this card on file for future transactions. I already have one saved, so I'm just going to cancel. And we have this Visa ending in 1111 selected. We're going to click Pay and Submit. And just like that, we're done. What are we going to do? We're going to e-file these forms to the IRS. We're going to mail those 1095 forms to the recipient. We're going to post them on the online retrieval. That was the email function we talked about before. All you have to do is sit back and enjoy the rest of your January. If you'd like to print this page, that availability is right here. If you'd like to print a receipt for this transaction, you can click Print Receipt right there. One other quick thing to note is that you will also be receiving an email from us at this point that says thank you for using it. Here are your confirmation numbers. You can check the status of your forms right here. Pretty simple. One quick thing, common questions that we have. Number one is what's the status? And you can always come back here to Filing Home. As long as you're logged in, you can click Filing Home and then go to Form Filing History. And this little clock icon is going to be the status check. So if you click, you can see this order has been confirmed, but has not yet been sent to the agency. Once it goes to the agency, we will update the screen to make that look black and regular instead of italic. Same thing with recipient mailing and the online retrieval. Second thing from form filing history, if you needed to print a copy of this form or save a PDF for your record, just click the full print icon. You can select the employees, and you can have PDFs to print or save. Next thing is this little envelope icon. If you have an employee that says they lost their 1095-C form, go ahead and say, John, I had this got email to emp@mail.com. He'll say, no, that's not my email address. It's john@gmail.com. Punch it in, click send email. He'll get another email with a link to his form where he can put in the last 4 digits of a Social Security number for security and download his form electronically. It gets them out of your office faster and keeps you from having to mail anything to them. Finally is corrections. If you have a correction to do, maybe you had a TIN validation error, maybe you just realized there was a problem, click this little pencil icon right here, and then you can select your correction type and then move through the process again. You can make your correction directly in this app. I do recommend that you go back into your Spectrum software and update the information for next year. So that is a quick demonstration of our service. Is there any, let's move along to questions. Andy, you want to get some of those questions together and we'll go ahead and answer them?
Absolutely. We do have quite a few questions here. I'm going to start with going back to a couple of previous questions that folks had asked. Let me get back to Crystal's question about Spectrum last year not having a 12-month option to check. That is going to be the same case this year. Spectrum remains the same. So you will have to fill out those forms or fill out those for all employees for the 12 months. So that hopefully answers that question. There's a follow-up question to one that you answered a little bit earlier, Jason, about the using code 2E and line 16, and you'd answered that. They had a follow-up question to your answer. Wouldn't you technically be offering the union employees coverage because you are paying into their union plan? So would it still be 1H as the code you selected for line 14?
Sure. I am not 100% confident in my answer on that, and so I do want to verify it back to you. I am somewhat confident that you would still put code 1H because the IRS is going to say no offer of coverage, why not? And then they're going to look down at line 16 and say, oh, 2E, there was a union offer, so therefore there's no penalty needed here. So the no offer of coverage in line 14 does not automatically get you in trouble, I guess, for lack of a better phrase. As far as you're contributing to the employee, to the union on their behalf, again, I'm not 100% sure on that. However, I would say if you're not offering them coverage, code 1H is the plain thought process on how to do it. If I find out differently, I will make sure that to have Andy distribute that information to you guys. However, I do believe that you'd still want to use code 1H in line 14.
Okay. Another question here, a couple questions here I'll kind of combine. Do we turn in 1095-C forms for all of our employees? And another question is, do we turn in 1095-Cs for every employee who's receiving a W-2? We have union employees who are not offered insurance. We have seasonal employees and we have full-time employees. So do you offer the 1095-Cs or do you fill them out for all employees, basically?
Sure. The 1095-C should be filled out for all full-time employees, and that is a full-time by the Affordable Care Act definition is actually 32 hours per week on average. So you need to fill out a 1095-C for every single employee that every single full-time employee you have. I didn't catch all of that question, and I don't know if that answers the second half of that.
The full question again, Jason, just so you have that, is do we have to issue a 1095-C for every employee who is receiving a W-2? We have union employees who are not offered insurance. We have seasonal employees, and we have full-time employees.
Okay. Yeah, every full-time employee needs to be offered or needs to get a 1095-C. If they're a union employee, if they're still your full-time employee, they need to be offered a 1095-C. Not necessarily a W-2 if it's a part-time employee or if they fall under the seasonal requirements. I'm not going to get into all the specifics of seasonal workers. However, if they qualify as a full-time employee, they need to receive a 1095-C. But if they're a part-time employee, even though they're getting a W-2, it doesn't mean they need to get a 1095-C.
Perfect. Okay. Here's a question here. I'm not sure if I quite understand this one, but Jason, maybe you will. If the employee does not have to pay, do we leave box 15 blank, or do we need to enter a $0 amount, basically 0.00?
The IRS, I actually kind of questioned this last year. It was a little bit confusing in this situation. I don't know if confusing is the right word. You would enter 0.00 in the field of line 15. However, if you are paying zero, or I'm sorry, if you're charging your employees zero, minimum essential coverage, providing minimum value offered to full-time employees, you're going to fall in this code 1A as long as you're also offering to the spouse and dependent. If you're not offering a spouse and dependent and you're not charging your customer, or you're not charging your employees anything, you would use code 1B and put 0 in line 15. However, if you're offering zero cost employee-only health care, but you're also offering some other kind of coverage to the spouse and dependent, you're going to fall into line 1A, and if you fall into code 1A in line 14, line 15 you don't have to fill out. Does that make sense?
Okay. I think that makes sense.
Zero is definitely going to qualify for 1A. I guess is what I'm going to say, as long as you're offering coverage to the spouse.
Gotcha. A couple more questions about lines and codes here. What code do you use on line 16 if the employee declines coverage, where the code in line 14 is 1A?
Sure. If the code in line 14 is 1A and the employee took coverage, you would want to use code 2C. If the code in line 1A and the employee declined coverage, again, 2E is priority, after that 2C, and then after that you choose the best code. Line 14, code 1A, it says that you are under the federal poverty line safe harbor. So at that point, if you have a code, you have something in 1A, and the employee did not take coverage, you would probably want to use code 2G, because that is the safe harbor that you can get under. That's the easiest one to calculate. You don't have to calculate anything off of their W-2 or the rate of pay. So I would suggest using, most likely, as long as it applies, code 2G. I don't want to get too specific into advice I give, just because there's a lot of different circumstances that could be swirling on that, on any individual thing. But in general, if you can qualify for 1A and the employee waives the coverage, you're generally going to be able to qualify for code 2G.
Okay. And hopefully that answered a couple other questions as well that people asked about that. So I'm going to skip ahead to a different question here. If our waiting period is 91 days for regular employees and a union employee is hired and terminated within 91 days, are we required to issue a Form 1095? We would not be required to issue one for regular non-union employees, as they were never given an offer of coverage. Does this apply to union employees?
Yeah, boy, that is a little bit more. That's a little bit more in the weeds there. A little more in the weeds than honestly I'm comfortable going, just because there's just too many possibilities swirling inside of there that we can't cover at the moment. So I am going to punt on that one, and just I'm not comfortable offering that level of advice.
Certainly. Okay. Let's see here. Here's another question. This is our first year having to report 1085Cs. Does Dexter Cheney or Nelco offer support to create these accurately? I think we touched on that a little bit here. Jason, do you want to say anything else on that?
I'm sorry. Is this the first year that we're working with this? Is that what I'm?
Yeah. First
question.
First year they're having first year having to report 1085Cs. Does Dexter Cheney or Nelco offer support to create these accurately?
No, we did offer the service last year. Same exact service. What was offered last year. Had a lot of people work on it, and it worked out very well.
Okay, perfect. Another question here. Are you suggesting to leave off the Social Security number for dependents even when we have and just list the date of birth, or to list both? Sorry, let me repeat that question.
Yeah, go ahead.
Are you suggesting to leave off the Social Security number for dependents even when we have to just list the date of birth, or to list both?
Okay, great question. First off, on your first pass through these, and when I say first pass, you might get some TIN validation errors that would cause a second pass. The first pass through these, if you have the SSN or the other TIN for the covered individuals, put that in there. That is what the IRS is asking for. Date of birth is acceptable if that SSN or the other TIN is not available. When you go to do corrections, obviously there is a problem with the SSN or the name, and so we recommend if you have to do a correction, substituting out the SSN for the date of, substituting out the date of birth for the SSN. However, if you have the SSN, I would recommend putting that in there. Generally speaking, again, very generally speaking, I don't think most of the TIN validation errors came on the Social Security number. I think most of them were in the name spellings. So it's not going to make or break most things. However, we did recommend doing that on corrections just as a best practice, because obviously there was a problem inside of that transaction.
Okay. Another question here, is a TIN required, or can 1095-Cs be mailed and not electronically filed?
If you are filing more than 250 1095-Cs, they do need to be electronically filed. The IRS prefers electronic filing regardless of size. However, if you're over 250, 1095-Cs being filed do require filing. If you are under 250, you can print and mail them into the IRS. That is an option. If you'd like to go that route, I think it's easier just to electronically file everything and be done with it, and you have statuses saying the IRS received it. You don't have to worry or wonder if they were lost in the mail. So again, I think it's easier, more efficient to electronically file, but yes, you can mail them.
Okay. This is a reference back to the last webinar. So the webinar on Tuesday said the deadline was January 31st for everything. Did this change in the past 2 days? I think that's referring to W-2,
sure.
isn't it?
Yeah, let me clarify. Let's get back to that screen for the 1095s. For those of you who don't know, the filing deadlines for W-2s and some 1099 miscellaneouses changed this year. This is to prevent some fraud inside of the IRS. And basically, if you look at these 3 possibilities, first one, it has to be postmarked out to the recipients. Second one, it needs to be either postmarked to the IRS or electronically filed to the IRS. One of the other of these, whether it's February 28th or March 31st for e-file. For W-2s, all 3 of these dates are January 31st. For 1099 miscellaneouses with information in box 7, all of these dates are January 31st. For the remaining 1099s and the 1095s, the deadline is January 31st for recipients, February 28th if you're mailing them to the IRS, March 31st if you're electronically filing them to the IRS. The only place that this changed is on W-2s and 1099 miscellaneouses with box 7. That being said, as I walked you through our service, simplest action to use is to use a bundle service, which does everything, and then you don't have to think about it. And if you're going to bundle them, you need to have them all done by January 31st just to get those employee copies done. So I would recommend using that bundle service and having it all done by January 31st. I don't know where you guys are at. Most people want to get this done off their plate. If you have the employee copies done by January 31st, I really recommend you just send them into the IRS right away and be done with it, and so that way you don't have to worry about it moving forward. However, if you want to delay it, if you're mailing, you can wait till February 28th mailing it to the IRS. If you are electronically filing it, you can wait till March 31st. But the employee copies do need to be sent by January 31st. All employee copies, whether it's W-2, 1099, 1095, need to be mailed by January 31st. The information going to the IRS is where there's some difference in the different forms.
Okay, makes perfect sense. A couple questions about importing emails here. Can you upload email information? Can you import emails directly into Nelco, or do you have to type individual emails? So a few questions there on whether or not you can basically import emails.
Yeah, great question. Coming out of Dexter and Cheney, if you have your employee email saved, I believe they will come over on that file you save out of your Spectrum software. At that point, those emails will automatically populate. I believe that is the case, that if the employee emails are saved, they will come over automatically. If not, you would have to manually key those in. There isn't another import function, but I believe they should be on the Dexter Cheney Spectrum software file that comes out of there, and at which point it would populate into our system.
Certainly. Folks, there's no way I'm going to get to all the questions that are asked today. I'm about halfway through them here. So I will say I want to ask a couple more questions here, but before we get to the end of these, I do want to say that hopefully we can follow up with you folks. Jason, I'm imagining you'll be able to follow up with folks here after we send you these questions as well, just to clarify with folks.
Mm-hmm.
Okay, perfect. With that said, there have several questions about the cost. What's the cost per form? What's the cost of the system? How much does Nelco charge? So a few questions on that. So Jason, can you clarify from Nelco's perspective on your services there?
Thank you for queuing that up so nicely. The pricing here, the final slide is some resources. And the pricing here, you can click on, again, and if we could send these PDF slides to everybody, you'll have these resources available. This is in the How It Works page. And if you go out to our website, along the top, you'll see Filing Home and How It Works. You can always click on How It Works, and you will see, if you scroll down here, the pricing is going to be dependent on the number of forms that you're filing and what services you're taking advantage of. So example, for ACA filing, it's Federal E-File and Recipient Delivery. This one down here has State E-File included because that's for W-2s and 1099s. I don't think something I mentioned this time, however, the same walkthrough for 1095 reporting is available for W-2s and 1099 miscellaneous. So something to keep in mind if you're interested in using us for your W-2s or 1099s, the service is available as well. So you can find the service you want to perform, figure out how many employees you need to do it for, and then that price will be populated right here. For example, if you want to do the bundle service and you have 280 employees, cost is going to be $2.50 per employee. Peak pricing over here on the right is only applicable on January 31st. Final day of the filing season, we are busy, obviously. A lot of last-minute filings coming in. We do guarantee until noon Eastern time. If you complete this process by noon Eastern, we will go ahead and get those printed and mailed on that day to meet the deadline. Oftentimes we'll go till later in the evening, till 5 o'clock, or sometimes even 8 o'clock Eastern time. However, we do guarantee by noon we will have all these processed. So I would recommend you don't wait until January 31st simply because the price goes up. And again, that is the last day, so it is the busiest day of the year for us. So in general, if you, again, 270 employees, $2.50 for the complete filing, kind of a ballpark number. For your specific instance, you can come out here and kind of check your own.
All right, and just one more quick question here. Does Spectrum version 13 work with Nelco software? We just kind of got an answer on that yesterday. So Jason, do you want to clarify on that?
Yeah, Spectrum's version 13 will work. I don't believe it will work for 1099s. I believe that only works with version 14. However, for W-2s and 1095 forms, yes, Spectrum version 13 will work.
Perfect. All right, folks, apologies, we are coming up to the top of the hour here, and we know folks have other things to do and some other things here. So I just wanted to say, again, thank you, everybody, for joining us. If you would like a copy of the slides and recording today, feel free to email me at aholtmann, that's AHOLTMANN, at dextercheney.com, and I'll make sure to get those to you. We'll also, for any questions we didn't get to on the webinar today, we'll try and have the appropriate person follow up, whether it be Jason from Nelco's perspective, or if there's somebody, if it's a Dexter Cheney specific question, or a if it's a Dexter Cheney specific question, then we will try and have the appropriate people follow up from our side as well on that. So again, thank you everybody for joining us today. And Jason, you have any last words or comments to the folks here today?
Nope. Let me know if you have any other questions, but it's been a pleasure going through this with you. And good luck with ACA reporting.
Absolutely. All right, folks, we'll leave this webinar for about another 30 seconds or so, and then we'll go ahead and close it out. Again, go ahead and email me at aholtmann, AHOLTMANN, @dextercheney.com if you would like a copy of the recording and the slides from today's webinar. I'll hope to get those out by very late this afternoon. If not, we'll get those out probably first thing in the morning. All right. Thank you, everybody.
Thanks, everybody. Thanks, Andy.